Okay, ladies and gentlemen, today is the 24th of Feb 2021. It's 1 minute past 1 o'clock local time. This is pound yen on 100-hour chart trading at 149.609. So, yeah, I made a video before where I said that I'm planning this trade, and what happened is we had a massive stop run to the upside with this pin here taking out long-term stops at the 150 level, which is of course also an even level. Loads of stops accumulated there. So right after, what happened is the price lost momentum, exhausted, then did a bit of a retest even on the micro level, and now is normalizing. So yes, it is a very advanced trade. Don't do it, but I will place a first short trade here. And let me explain why. Because, alright, so I need to elaborate a bit to make you understand this particular situation. The plus of the trade is that we have a post-stop run scenario where even long-term stops have been cleaned. Alright. The minus is that the price is so far overstretched to the upside that it's likely that in the next 10 to 20 hours, many shorties around the world get lured into the market trying to short it down. Now understand that in such a particular scenario here, there is the money tolerance and it's rather high. So that means even if the smart money will try to shake off those shorties, ultimately there will, there's a chance of a nice normalization move, even if some of those shorties win, because also look at the money switch indicator, the over tolerance is high. So it's rather predictable what will happen, and this is why I place a first short trade here. Also note that, as I explained in the last video, in such particular situations, I like to, trade at market, not via limits, because this big exaggerated stop run is, of course, a fantastic chance to get a good price for this trade. Now, so that means two scenarios. Either, and of course, I have to say this is the base case. It's likely that shorties get triggered by that, but don't try to predict the money too much. Okay, just react to what it does. But it's likely that it gets triggered, right? So that there will be shorties coming in trying to grab some pips and then up moves and retests of the high, etc., etc. Yes, but there's a chance that the price, if not enough shorties come in, or even longies try to even buy a breakout above 150, which is a very bad idea because it's an expensive entry. If even this little money switch occurs, this could lead to a very nice reversal move down. So no matter what the scenario will be in the end, I like to place a first trade at those prices, because look, first scenario, the price goes up once more and I place my second short. Okay, it can be even 200 pips, okay, to understand that. In such situations you can't leverage much, only place a small trade because it needs room to breathe. Okay, and then it's likely that if I place my second trade, if it comes down, I can close at a net profit. Second scenario, shorties are exhausted, or the shorties are within the money tolerance, so the price will not only go down, but maybe if after a pullback do a complete move down towards those stops here to the 146.21 level. You understand? So this is again an advanced example, and the way I personally play it on the manual side is like I described to you. Okay, I'm happy with both outcomes. Either the price comes and I take profit on this position, or the price goes further up, taking out even the last stops against new shorties, and I do a second short and then close both shorts together once there is a normalization move. But obviously all this needs to be incorporated in your risk management policy, and that's something I will also elaborate on in a separate video once I find the time to talk about that too, because that's a key in this game. Beginners make the mistake to think it's a binary outcome, and it's a binary game, and I either win or I lose, and either it hits my TP or my stop loss. That doesn't work. Okay, that doesn't work in any way. That would be easy, right? Because all you would need to do is just get a win-loss ratio which is high enough, and then to overall get your binary outcomes to some kind of up move on your account. That's not how it works, generally speaking. So in particular with those more sophisticated setups, you need to have proper risk management in place, and you need to understand the complexity of such scenarios, including the limiter levels as well. So, okay, I've tried to explain to you my analysis and rationale. So 149.6, I'm doing a short here. If it cleans the high, I prepare for another short. Stay safe.